Hey y'all, Erica Kelly, your mortgage advisor, coming to you today on this fabulous Fall Friday to talk to small business owners, specifically those that are looking to purchase a home now or even in the next 2 to 3 years. Did you know that there are 28 million small businesses in the US today? And 22 million of those state that they are self-employed, meaning that they don't have any additional employees. Half of those people state that they are home-based businesses or work from their home, which means they need to have a secure place to work and live. And that's why today we are talking about self-employed people and how income is calculated and why it's so important to have this conversation before you file your 2018 tax return. Now, let me first break down to you how self-employment income is calculated to qualify for a mortgage. First, because you are not guaranteed any kind of income by another company, say hourly or salary, then you are not going to get what's called a W-2 form, which is from an employer at the end of the year that tells us what you have made and what you've made on average over the last 2 years. So the only way we know what kind of income that you're making is what you file on your federal IRS tax returns every year. We all know that there are many ways that you can take advantage of deductions on your tax return, and that's why it's so important for you to have a great CPA and a great tax advisor to help you out. But let me break it down to you of how we would calculate it. Let's say that you earned $50,000 in 2018, but you take $30,000 worth of qualified deductions. What you're essentially stating to the IRS is that it took you $30,000 to make that $50,000, which means your net was actually $20,000 in income. And that is going to be the income we can use to qualify you for a mortgage. Now, there are some things that we can add back, depreciation, mileage, those kind of things. But in general, we're going to use that $20,000. And we're also going to average your 17 and your 18 tax returns to find out what income we're going to be able to use. Now, what this whole purpose is to mitigate risk so that we can ensure what we think you will continue to make in the near future, and to ensure that you're going to be able to afford your new monthly housing payment. Now, like I stated before, I am not a tax accountant and I am not a tax advisor or a CPA, but I do know how the income is calculated. So if you are in the market to purchase your new home now or even in the near future, then give me a call. I'm happy to take a look at your returns and let you know what we'll be using for your income and what your purchasing power will be. And also, I say all the time, it's not if you can buy a house, but when you can buy a house. So give me a call, we'll map out a plan, and you'll be a homeowner before you know it. 615-423-3095. Have a great weekend.